What's going on, guys? It's Tickers and Tokens here, back with another video, and I'm coming to you straight from the Google earnings report. We just got it a few minutes ago. We've seen Alphabet. Shares have already dropped more than 5% in the aftermarkets here. The earnings per share came in at $1.06 versus $1.25 expected. Oh, that's a big miss, y'all. That's a huge miss for Google. You got revenue coming at 69 versus 70 billion expected. YouTube revenue took a big hit. You see it at 7 billion versus 7.5 expected. Google Cloud came in actually a little slightly higher. They actually beat their cloud estimate, so their cloud for service is doing pretty well. They're paying less to get more customers. Their traffic costs are $11 versus $12 expected. So it's a pretty mixed review. All in all, is the big revenues miss, and YouTube revenue especially. You see it drop off like that, that's pretty big, and that's a bad sign for the market ahead of time. And you see the same thing in Microsoft today. They had earnings today. Actually beat on all their revenue estimates, and they had earnings per share of $2.35 versus $2.30 expected, and the revenue came in at 50 billion versus 49 billion expected. What took the biggest hit for them was their cloud revenue. They aren't making as much on like their cloud services and their like the office services and things like that. The things that's like the bread and butter of Microsoft's business model right now. And you're seeing just an overall decline in consumer demand right now, and it's really hurting these tech stocks, y'all. But all in all, they're still showing strength compared to the rest of the market. We're gonna watch this video right here, and we're gonna react to it, see what they got to say. It's been a very mixed.
Research analysts, we know about higher interest rates. Dan, that gives us multiple problems. That's why people have talked about tech being problematic, the NASDAQ maybe being more adversely affected by what the Fed's doing. You've got a lot of headwinds that you're bringing up for the results, too. So a lower multiple on slowing earnings growth, too. What are the things that are hurting the results, the actual fundamentals?
One of the biggest things is just inflation, because the higher prices go, the less people are going to want to buy, their computers, and want to buy the mouses and laptops and all these other things that are like the core business model of Microsoft or Google. Will say, I mean, people are always going to use the search engine, sure, but they're going to have less, they're using less ad revenue. They're spending less on advertising, so that's going to hurt revenues all the way down. You're seeing that especially in YouTube. I mean, if Google's got the money to even meet their own profit margins, then how are they going to pay YouTube creators? It sucks for me to say that because I am a YouTube creator, but I mean, it's just keeping it real. And it's just the demand for everything is just down, y'all. That's just plain and simple of it. It sucks, but you're going to see it reflected in tech earnings.
Tech right now.
Good morning, Joe. Besides higher interest rates, of course, there's a little more inflation in the system. There's cyclical headwinds. Let's not forget FX as well, which is really a transitory impact.
Supply chain.
I think supply chain, higher labor, higher fuel costs.
All those
the list goes on. Trade tension.
Those will affect Amazon and Apple more. They got more business over in China. Supply chain issues will definitely affect Amazon because they could do a lot of transportation. So, like the fuel costs, shipping costs, distribution costs, and they're global too. So any supply chain issue happening in any country at all, every country at all, just about, is going to hurt Amazon quite a bit. So the slower and slower you see the global economy goes, I think you're going to see Amazon hurt the most. But I think Amazon will be the biggest beneficiary of the rate hike cuts and rate cuts. I'm sorry, and just overall lower inflation, because their business model depends on being able to transact business around the globe. It's just
absolutely. I think though, if we step back and think about what's going on, the companies that are able to invest, to innovate, really to execute on their product cycles through this, I think those companies are going to emerge stronger as we get into next year and really look at the reacceleration of growth.
Yeah, I mean, you see when you see like the actual reacceleration, like I was just talking about, yeah, you're going to see these stocks do really well. But in the meantime, y'all, keep an eye on these earnings, because it's going going to be a rough period for the next 3 to 6 months on these earnings because market's just being bleaker and bleaker, and Jerome Powell's just getting more and more aggressive. And I keep hearing talks of pivot, but I ain't seeing it. And their target is 2% inflation, so they're
late next year and into 2024. So, insofar as this week is concerned.
Okay, y'all, this video is just having issues. I'm just going to roll off the head here. And yeah, just keep an eye out for Meta's earnings tomorrow. Make sure you keep an eye out for Apple and Amazon's, especially on Thursday, because those are the ones you really want to watch. I mean, if all goes bad there, then it's gonna be bad. The big thing to watch with Apple was like their iPhone 14 sales. How is consumer demand affecting that? Are they still selling like they normally would, on pace with like an iPhone 13, iPhone 12 launches? Are they still going to be able to beat out last year's earnings revenue on the iPhone? Like, even though they're raising prices, are the sales figures going to match that? You know what I mean? Amazon, you just want to see the global picture. Because they need to do a lot of business in China. So how is China going to affect their numbers? How is overall inflation picture going to affect their numbers? You know, how shipping and transportation costs. It's going to be a rough little period for Amazon as well. But these are all like my favorite stocks, y'all. I'm gonna keep buying these stocks all year. Probably buy these stocks to the day I die, because these are just the companies that run the whole world right now. I mean, it's just as simple as that. But this has been Tickers and Tokens, guys. Just want to give you a brief overview of the earnings picture this week, and it's a follow-up video to the one I put out recently. I'll be waiting for Meta's earnings. I think it's tomorrow, and I know Apple's and Amazon's are on Thursday. So if you don't see me tomorrow, you'll definitely see me on Thursday. I'll be looking to record a video right after those earnings. But anyways, guys, I really hope you enjoyed the video. Please like and subscribe if you did, and I'll catch you in the next one. Take care.